Hey, my name's James Nicholson. Welcome to my channel. It's the first of the month, which means we've got some house price data, this time from Nationwide. And it's some shocking data because everyone's just wondering when are house prices going to start dropping officially in the data? Because right now, with Nationwide data, it's gone up again. We've got some other interesting stuff in there. How much has it gone up? How much has it gone up on an annual basis, not just a monthly basis as well? And why is this happening? Because they've given us some insight into their reasoning between why house prices have gone up. So before we jump into this, as always, if you haven't subscribed to the channel, do that right now. Subscribe to the channel and hit the bell notification. We've got new content every single day. We make hundreds of videos every single year. So you don't want to miss out on what's going on. And smash the like button, tickle the like button, do something to the like button, guys. That really helps us with the YouTube algorithm. It'll take you a second to do, so do that right now. So, Nationwide data. It's interesting because we've talked about this recently. We said that the rolling average is going to start improving because at the back end of 2022, October, November, December, when we had Liz Truss, we had that mini budget, we had interest rates that the mortgage rates that we could get were over 6%, 7% for some people. Well, at that time, house prices dropped. Now that data's gone, right? That data's now gone. So on the rolling average last year, we had pretty much a flat year, which was interesting. Now, on an annual basis, house prices are now up according to Nationwide, and they are up 1.2% year to date, February to February, which is interesting to see. Now that's moving in the right direction. And what that does is gives people that little bit of protection because the market inevitably could crash, could go down, could turn. And so that gives people that little bit extra comfort. So that helps a lot of people. That's good in my opinion. So it's a 1.2% up. But if you take into account pay rises, if you take into account inflation, house prices in real terms have actually dropped, that means on an annual basis, which means affordability has improved for some people, which is good. Nationwide is saying that the outlook at the moment is uncertain. I think no one would disagree with that. We've got the uncertainty on, and they're saying the biggest uncertainty and what they feel is going to hit house prices the most, which some people will disagree on. They're saying interest rates is going to be the biggest thing that's going to hit house prices this year. And we've got the uncertainty of when are the interest rates going to go down. It's likely to happen, but when is that likely to happen? That's what they want to see here. Now, other people would say, look, what the uncertainty is more how much unemployment are we going to have? How deep's this recession going to be? Are we going to come out of this recession pretty quick? Or are you going to linger in this recession for a prolonged period of time? That's also going to impact house prices, of course. And so mortgage costs have improved, they've said, in the last few months. So we've seen that. We've been talking about that on the channel. We had interest rates going from 6% for a lot of people, and we were able to get deals more recently. Some people got a deal smidge under 4%. I got one at 3.99%. Others did too. But there are still rates out there today at 4.14. We did the mortgage roundup a couple of days ago. If you didn't see that already, on Wednesday we do that. Go and check that out. We had some rates at 4.14%. We had tons of rates under 4.5%, which is much better than last year. So if you take into account that people, on average, maybe not you, but on average, people had a 7% pay rise last year. We still had high inflation, which means the value of the house is effectively less in real terms. So that means affordability improvements there. And we had mortgage rates go from 6% to 4.5%, 4.25%, or 3.9% if you were lucky. That's improved affordability. And that's why in January this year, we had an influx of buyers into the market. That's interesting, right? So Nationwide are kind of backing up what we've been seeing here. So how much are house prices up this month, or February, as it was? 0.7% up in Feb of 2024. That's a pretty decent month. We had some months where it was 0.1 up, 0.1 down, sideways, 0.25%, but this is a bit more of a chunky number. We'll see later in the month, do Halifax agree with this? Have they seen the same reflected in their data? But if you speak to any agent, this is what they are seeing. It's been a busier start to the year. Doesn't mean it's going to carry on like that, but it has undeniably been busier this year. What else is going on? House prices in general are down. So they peaked in the summer of 2022. Remember, that was before we had the October, November and December drops. And since the peak, house prices are still down 3% since 2022. So even with this increase, house prices are down around 3% at the moment, which is not too bad. Now, as an investor, that's not too bad because you should be able to negotiate 3% discount. You should be able to add more value than 3% to a property. All of this stuff is stuff that you can control. That's really, really good. Now, where this could get a bit hairy is we've got the budget next week. We've got potentially 1% deposits. We've got already 5% deposit deals out there. So people on those kind of deals have got to be cautious when they're looking at their deals. They've got to make sure that maybe they've got some money to top up their deposit. They could go negative equity. That could be a major problem going forward. So we'll see how this stuff pans out. But we don't want, well, you might, but I don't want too much volatility in the property market. I think another flat year like last year would allow people to catch up. If pay rises continue this year, affordability would improve. If mortgage rates carry on to drop by the end of the year, which we expect, that would improve affordability as well. And in real terms, because inflation is still above that 3% or 2% target, house prices are actually, in real terms, getting cheaper. The average house price at the moment with their data is £260,420, up from £257,000 last year. So what do you think about this? It's always interesting when we get these data sources. This is nationwide data. This isn't my opinion. I know someone's going to read the video title. They're going to comment below and say, I haven't got a clue what I'm talking about. Well, I do. I'm talking about the nationwide data here. But what do you think about the nationwide data? Is this what it's like everywhere? Because this isn't including cash buyers. This isn't including the Halifax data. And so it's interesting to see what is going on. Do comment below with your thoughts and opinions below. Do smash that like button, subscribe, go and check out some more content on my channel, including this video right here.